100 like $200. You're still getting your money and then like at least like 40%.
All right, just give it like one more minute for any other stragglers to come in, and then we'll kick it off.
Did VA ever fix the recording thing?
I think I figured it out, so hopefully it gets recorded this time.
All right. I'm gonna mute so you can start.
Cool, cool. Yeah, thanks again for everyone for joining. So this will be our eighth call. Typically, we try to do this on like a monthly scheduled basis, but given market volatility and everything that's going on, gonna basically pull the timeline up, and we might have multiple calls depending on what happens in the market. So everyone's already aware of all the events thus far, but maybe just give a little bit of context of like I think the best way to frame it is like what do we know, like what do we don't know, what do we not know, and then from there like we can start speculating on like what do we think is going to happen, given that there's like so much like uncertainty and a lot of narratives being put in place already. So I think maybe just to put some context to this, I think about a month ago, I was thinking about the market, like we are down about like 10%. And I guess the question is like, what is this currency of the market at that time and point? And my feeling was that we were kind of in a bear market at that time. And this is before the drop, with the tariff announcement on Liberation Day. And I guess my rationale for this was, things seemed pretty sluggish. I was getting kind of like 22, 23 vibes where, we had stagflation and the market was going down. But just like seeing like participant activity, and there's like very little people like really actively buying. So my kind of guess at the end of the March was basically, hey, I think potentially we might be in a real bear market here. And so post Liberation Day, right? We had like these huge drawdowns, more than 15% down in a week. So I think today, like we know that we have over a 25% drawdown, right? So if we define a bear market as more than 20% drawdown, that I think that fits the criteria. We have extreme volatility, so usually 30 is kind of like the mark where institutions and people look at, hey, 30 VIX is kind of very high vol market. But not only did we hit above 30, we actually hit up to 60. I think we had like our first bear market rally. So if you guys remember, there was like that
Market data
tweet
connection
from
lost.
Walter Bloomberg saying that tariffs are going to be paused for 90 days or whatever. And then
Market
you had
data
that huge
connection
rally,
re-established.
but then it was quickly retracing, hey, this is fake news. Then the administration came out and said, hey, no, this is real. We're going to actually pause the tariffs. And then you had that 10% upside day, right? And then I think what happened here was, Trump kind of like blinked first. That's kind of like the narrative right now. And so if we just kind of take like a high level overview, like purely from a price action standpoint, like what are like key numbers I'm looking at? So I think the
Market
first
data
is
connection lost.
that fake news positive reaction. So that 351. I would say
Market
like
data connection
if you want to be
re-established.
like a bull, right? You want to stay
Market data
above
connection
that fake
lost.
news reaction because that signifies you're having
Market
acceptance
data
of
connection
basically the narrative that
re-established.
tariffs are going to come down. Market's kind of accepting this fact, and then there's a little bit more certainty in the market. And then I think the next one that we really want to pay attention is we're kind of stuck within this 10% bar, right, from the announcement from the Trump administration. And so if you want to really get above that, so that next level is 19,394. So that's kind of like what I'm like looking at, like kind of like a micro level right now in terms of the market. But I think that's not to say that are we or are we not in a bear market. I think this really substantiates the point that we're in a very high vol environment. And second is that this is in fact like a bear market, just like 2020. I'm just gonna pause here if there's any questions so far, but this is kind of like my brief take on like what the current market is right now. Any questions so far? Alrighty, I'll move on then. So looking at other areas of the market, so I think we always hammer the point that oil is a major energy input and driver of inflation. And so we previously discussed that the $65 per barrel has been kind of a floor in the energy markets, specifically for light crude. And a major reduction in energy prices is a net drag on inflation, which we all know. And so even though energy prices are decreasing, which suggests a more kind of deflationary outcome, there's always kind of questions on are tariffs going to actually create like an inflationary impulse here? So if we think about the reaction in oil markets right now, I think there's like a few takeaways from here first. First is that in terms of like producer prices, so there's a difference between say like oil produced in Saudi Arabia, usually their break even's probably closer to $50 a barrel versus Permian sands and shale fracking in the US, which is around $60 a barrel, right? So if you remember, the Trump administration's goal is to increase um, barrels produced in the United States by $3 million. But for instance, if the barrel price is below $60, right, a lot of these shale fracking kind of industry within the US is actually under pressure, right? So if they can't get a break even, say like around $55 to $60 a barrel in terms of oil prices, they can actually increase their output in production. So that's actually a net negative. So that's why like it's kind of like a mixed bag here for me, in my opinion. It's if your energy prices are too low, right, then you can't actually produce in the United States. So then you need to actually import more. But if prices are too high, then this also creates like an issue where this is creating a more positive feedback for energy prices. So it's kind of like threading the needle here. But my net takeaway here is that you know instead of seeing kind of like an inflationary impulse, for instance, in the commodities market, I think they're more pricing like a deflationary narrative. But if we actually look at bonds, for instance, this is kind of like the opposite message, right? So we actually had a huge rally in both the 10-year and 30-year. So 10-year is kind of sitting at 4.5%, and the 30-year is sitting at 4.86%. So I don't know if you guys remember. So like during last week when we had the big drawdowns, especially overnight, you saw the yields actually going up. And this is kind of a question like, hey, okay, equities are going down, right? We previously had like the 10-year yield go below 4%, right? And now you're having like a 50 basis point move in the opposite direction. So like what is going on here? Is it China selling treasuries? Is it this Japanese hedge fund? Is it this you know basis trade blowing out? I don't think people really know actually at the moment, quite frankly. So we do know that the market is under stress. I think we do know that instead of having the desired effect of having lower yields, we're actually having yields run in the opposite direction. And this is kind of diametrically opposed to the goals of the administration, right? If you want lower inflation, right? If you want lower yields and you want to be able to cut interest rates, then your bond prices have to go up and your yields have to go down. But we're actually getting the opposite of that. And this is kind of running counter against the commodities. So this is why it's kind of again like a mixed bag, right? When you compare to say for instance oil and energy, which seems to really price in deflation, right? The bond market seems to appears to be saying something different. But I think the rationale for this is twofold, right? So if we're only having very minimal like fiscal cuts, right? I think Doge, Elon originally claimed that he can do 2 trillion in cuts on the fiscal side, right? And then he was like, okay, maybe we'll do 1 trillion. And now I think like it just came out that he's going to be able to only cut $150 billion, right? So that kind of makes sense in my mind, right? Why yields are going to go up, right? Because if they can't cut that 1 trillion mark, right, then how are they going to push the needle in terms of the fiscal deficit, right? And then I think the second aspect of this is that Trump's talking about his beautiful big bills on the way, which is going to promote additional tax cuts, right? So if you're bringing in less revenue, right, in terms of the government, then this is also going to be inflationary in a way, or the yields are going to increase. Uh, yes, I can drop the Word doc in the chat after the call. So this is why I think there's like these opposing narratives, right? So you have oil that's kind of pricing in this kind of almost deflationary shock if you really think about it. But you have your bond yields kind of crashing to the upside rather, right? That's also kind of pricing this stagflationary environment. So, you know, sometimes these markets kind of like go out of sync, and so it's more of a question of like what's going to be the bigger push and what's going to be the bigger pull. But right now, I think a lot of people, especially that are long duration or equities, they're more concerned on the bond side. And so I'm just going to pause here if anyone has any questions so far. But this is just kind of my interpretation of things.
I might have a quick question that kind of sounds dumb, but is anything that they're actually doing, does it make logical sense?
Yeah, so I'm about to talk about the end game. So I think this is like a really good segue, right? So what is actually the goal of the administration with these kind of tariffs on, tariffs offs, right? So I think what we do know, right? Again, because there's a lot of uncertainty, so let's just stick to like what's been communicated, right? So he basically said that his goal is 333, right? So 3% growth rate in terms of GDP, 3% budget to GDP ratio, and 3 million extra barrels of oil. And basically, what this boils down to, in my view, is they want to lower inflation. Once they lower inflation, this enables fiscal flexibility in effect to drive lower yields. If they have lower yields, they can refinance about 9 trillion in debt that comes to maturity later this year. And if they can, be able to refinance that debt, they'll also be able to start cutting interest rates. So I think that's kind of like the goal of the administration, in my view, and what's been communicated. And in terms of how do we get that fiscal flexibility, right? So I think to the point of tariffs, right? Lucknick, right, where he's responsible for the external revenue service. So originally, like what was communicated was that they were going to do like 10% tariffs, and the expectation is that this is going to bring about $600 billion a year in revenue, right? And on Musk's side, Doge was expected to bring about 1 trillion in spending reductions. And so basically, you might have heard that the U.S. has a 2 trillion budget deficit, right? So by combining both external revenue with tariffs and Musk cutting, internal spending within the government, this would in effect close the budget deficit of the United States by 2 trillion, and this would kind of make us net neutral. So I think that was kind of the intent, but there's almost like a bait and switch, right? So everyone was expecting, okay, 10% across the board. Um, but this was actually not the case, right? So Lutnick and Navarro made their announcements. Trump had his board with, 90% tariffs on Lesotho or whatever, and like the tariffs on like the island with the penguins, right? And Doge came out and they said they only had about 150 billion in cuts, right? And basically, I think what you can see in this dynamic is basically Musk is kind of coming out of favor, right? He's like on his way out. If I recall correctly, he called Peter Navarro Peter Retardo, right? Things like that, dumber than a bag of bricks. So there's kind of like a very clear kind of division between, Musk saving money on the Doge side and Lutnick and Navarro bringing money with tariffs, right? So the goal was the two together are going to create, enough cuts and revenue to actually close the deficit. But now it seems like, Lutnick's gone way too far and Musk was not able to actually achieve his stated goals, right? So that's kind of, I think, what happened, right? And then, China raised their tariffs in retaliation. So this is like a really interesting statistic. So I think this is why Trump's kind of pressing the tariffs, right? So even though we have 4% of the world's population, we represent as a country 35% of all global consumption, which is about $21 trillion. And of course, China has the largest deficit with the United States in terms of trade. And so, in effect, right, 35% of global consumption is kind of like this huge carrot, right? The United States wields, right? So depending on where we kind of enact our trade and where we're going to source, the goods that we want for our consumption, the 35% represents a lot. So you can imagine that, if China doesn't come to the terms that Trump wants, for instance, like the threat by having basically high enough tariffs that's basically almost like a trade embargo, it's that inventory is going to keep building in China, right? They're not going to export it to the United States, right? And then basically the people in the factories that are making all these products are going to go out of work. They're going to be unemployed. Since China's already had like this very huge deflationary environment, it's going to kind of cause more pressure on the Chinese CCP government. And this is in effect going to kind of create like a very tricky position for the Xi and his government, right? And then we didn't know at the time, right? So this is kind of, again, let's just stick to like what we know. So the U.S. stated that they're working with Japan first. Japan sent a delegation to the United States for negotiation after they first announced the tariffs. Then they also talked about working with India, South Korea, and now Saudi Arabia. But there were like a few quotes that came out like over the past week that I think kind of like hints at like what's going on here. So I have a quote from Peter Thiel, and why do I have a quote from Peter Thiel? Well, Peter Thiel is very heavily associated with the Trump administration, not only with Palantir, but also JD Vance was kind of almost like a protege of Peter Thiel, right? You have a lot of kind of Trump and the kind of bright tech elite around his inner circle. So I think he provides a lot of insight and perspective into what's going on. And so he said you need a very drastic reset with China. In theory, you need a reset with other people, but what we really need to do is to get them also reset things with China as well. Um, so David Sachs from the All In podcast, I really hate listening to Chamath talk about Laura Piana, but I think there was like one piece of information that I think was relevant. The U.S. needs to accelerate decoupling with China, right? A measure of success is to reindustrialize in the U.S. so that we are not dependent upon a hostile adversary, right? And then there was another quote from Jim Carson, we already know. But he was talking about how new news from Japan and a willingness to work together, but some grander deal would eventually create kind of a template for the rest of the world, right? Um, so yeah, the question is like, how do we expect economies of scale to accelerate these events? So I think that's kind of like the problem, right? Like instead of like a tiered, okay, we're gonna reshift our supply chains, right? This is almost like a blitzkrieg, right? Like do this now, or you're gonna get fucked by tariffs, right? And we don't have any real plans to like incentivize you to like manufacture in the United States. Instead, we're gonna use this like big stick of either you're with us or you're not, and we're gonna tariff you if you don't, right? But I think what's happening here is right there's it's very clear that the entire point of this kind of tariffs or in effect this trade war is for China. That's just like my perspective. But you're kind of getting this color from like other people that are like kind of on the inside, like David Sachs, Peter Thiel, right? Their view is that China is kind of the adversary. China is the enemy, right? And that we do not want to be dependent upon pharmaceutical APIs, uh, basically semiconductors. We don't want our leading edge technology such as AI and robotics to be dependent. And what happened was right. Um, so we had the exceptions on semiconductors, electronics, iPhones last Friday, and then Trump literally comes out today saying there was no tariff exception. So there's a lot of kind of like fog of war here. I would say there's a lot of uncertainty, and like we're not really sure what the end game is. But let's just step back and take all these like facts into consideration, right? So China was the only country that retaliated with higher tariffs. Other countries are already being negotiated with. So if you guys remember, like when Trump had that billboard with the tariffs, Mexico and Canada were not on the billboard, right? Japan is the first to become like a priority, followed by South Korea, Vietnam, India, and now Saudi Arabia for potential deals. And I think this is going to be the key aspect. So kind of like what Jem Carson said about how new news from Japan and a willingness to work together is going to be important. What we're really going to see is what type of deal is Japan going to get, and I think more importantly, not with how Japan has a deal with the U.S., but how Japan's going to conduct trade with China itself, right? So if you guys remember, right, a lot of like trade kind of exemptions can happen. Like say you have like a product that's originally manufactured in China, but you send it to Vietnam and incorporate another component, and then you create a finished product, right? And then the product that's finished, the origin of country is going to be Vietnam rather than China. So that's how it gets around from the tariff exemption, right? So I think what's happening here potentially is that if China is considered the adversary, right, the U.S. kind of like stated goal or kind of the game theory here is to actually create a trading block where China is excluded and you close these loopholes, right? And in effect, right, the rest of the world is not going to actually be able to conduct trade with China. So I think that's what we're going to see with this deal with Japan. Like, what are the terms? But more importantly, what are the terms with China? So I think if like a poker analogy here, like if the tariffs were the flop, right, then the Japan deal is going to be the turn here. And I think this is kind of going to give us the first picture of like what Trump's like true intent here is with all these tariffs and these like back and forth. And again, if the goal is to kind of create a new trading block, we will see what the terms of the deal are. And I feel like they're going to apply this template to the rest of the world next. And if you really think about it, right, the U.S. is like effectively removing 35% of the world's consumption, right? So there's like this big carrot, and if other countries, like even our allies in the EU, are not going to follow, like Trump's going to use a stick of like, hey, we're just going to tariff you even higher, right? So that's kind of like my perspective and take of like what's going on right now. But happy to like pause here and like ask any questions or feel free to like chime in if you have any thoughts.
Do you think that part of the plan might be to get other countries to build the things China's doing instead, because it's not really going to happen here.
Yeah,
They say they
exactly.
want factories here, but it's easier to build one in India.
No, that's exactly right. So I think it's almost like you're creating like a new trading block without China, right? So basically, the rest of the world's going to be, manufacturing. It's not just in the U.S. that's going to be manufacturing, right? Like, I think there was like a poll that was on the FT or whatever showing like how many Americans are willing to work in a factory, and it's like only 20% of respondents, right? So Americans don't want to be able to like. I think the U.S. labor is still very expensive, right? I think the goal right now it's the U.S. sees China as a very near peer adversary, right, on the global stage, right? And so we have like this bipolar model of the world, right? And in and of effect, right, for whatever reason, the Trump administration feels compelled to basically decouple from China as quickly as possible, right? It's like they're firing the first shot right now, and then they want not only manufacturing to be onshore within the U.S. but with other allies, but more importantly, my this is my speculation here. It's they want to do a hard decouple from China, where no country is be basically allowed to like work with China, right? Yeah, so I guess this is all unknown, right? Evolution, like is India, Vietnam, like Malaysia, are these countries sufficient? And I would argue no, especially like in terms of specialized labor, for instance, like tooling and all like manufacturing, complex manufacturing is very difficult, right? But I don't think these countries are ready, right? They don't have the manufacturing capacity. Maybe they have the labor, but they're also not trained, right? So in effect, it's like very, very forced and very early on, and this is why it seems very chaotic, right? Because like no one's really ready, but for whatever reason, right? I think the administration feels extremely threatened and compelled right now to actually create such an environment that it's almost in effect creating like a hard decoupling event right now, right? But again, like I don't think we can really say this is a decoupling event or not until we see what the deal is from Japan. And I'll kind of expose a so like let's do a little bit more speculation here. So what if what if there is a hard decoupling, right? What if that's the true intent of the administration? So is China gonna like respond quietly? So they already restricted export of rare earth metals. Really, it's not the metals itself; it's the refining capacity and turning them into like, for instance, motor magnets, for instance, right? And the last time China was very stressed during a trade war, right? It was in 2018 with the Hong Kong protests too, and we all know the results was China basically exported COVID, right? And basically all their problems went away, right? So I think if this is an existential threat, which it could be for China, if there's like a decoupling event, um, the question is like, why does the U.S. feel compelled now? So I think the key here is the dominance of like advanced technologies, and I think preventing their rise as kind of a near peer is potentially one goal of the administration from my point of view. So let's take an analogy from World War II, right? So this is not the full reason why the U.S. committed to the war, basically, but at the time, right, early on, the development of new advanced weaponry such as like rockets, airplanes, and actually even the nuclear bomb was what really compelled administration in the U.S. to actually join the war. And similarly, like for instance, now like if the U.S. sees AI and potentially robotics as key industry and national security technologies that can't, um, for instance, be obtained by China, for instance, then I could see why this is like a decoupling event and that needs to happen now. And I guess another kind of like analogy is like initially we saw equity markets rose during the invasion of Poland, but they actually tanked on the French invasion. So, but that's the thing, right? So MP doesn't actually have the refining capacity right now. I think they just started the mining, right? So the next goal for MP is really to actually develop the industrial capacity to actually refine the metals that they mine, but I don't think they have that yet. So that's like the issue right now. But that's just all to say that you know a lot of this is unknown, right? And again, we have to stick to what is known, and so that's why I think that the Japan deal is going to be the key point of where we get more information. And then, what about all the positioning for Iran, right? So this is kind of like another potential, black swan or whatever. Like, what is the U.S. Why is it posturing so aggressively for Iran? And like we have the meme of the B2 spirits, and so if you actually measure the distance to the Three Gorges Dam, right, this is kind of a meme, right? But they are within range. But I think more importantly, the Strait of Malacca, right, where most of China imports its energy, right, and oil. So I think about 80% of world shipping is around the Strait of Malacca, but that is actually within range of these B2 Spirit bombers. So while the original objective or the appearance of the objective might be Iran, for instance, it could actually be more of a deterrence to China, right? Since this entire strait and this crucial shipping line is within range. Um, just food for thought there. So take a pause there, but any kind of questions so far? Again, I think just to summarize, like we know that the U.S. has a high amount of global consumption, and they're kind of using this as kind of a leveraging and negotiation tactic. I do think that the current administration is very hawkish on China, right? We're seeing this from people associated with the inner circle, and people are in the inner circle. They're seeing China as a hostile adversary, and I think the question is like we're not really sure like what Trump's exactly after, but I think once we see this deal from Japan, we're gonna actually kind of understand not only how the deal impacts the U.S., but more importantly, how that deal has terms that reflect China as well. And then, if for instance, Japan can trade with China, or they need to reduce their dependency upon China, then this kind of creates like a kind of a validation for the theory that the U.S. wants to create its own trading bloc that kind of excludes China as well, and accelerate the decoupling timeline, if that makes sense.
Sip, got a question for you.
Yo, yeah, go for it, man.
So, so yeah, just looking at Saudi Arabia and its oil exports to China.
Yes, this is a good question.
I know China is starting to diversify their sources from Russia. Get Iranian oil when they can. Get sourced through India. For some of that Russian embargoed oil. But do you see? I mean, obviously we don't know until we see the deal. But do you see any impact of whatever is proposed to Saudi Arabia in terms of tariffs? Cutting off China and potentially stabilization in the region in relation to Iran.
Yeah, so to your point, I think that it's like very opaque. But like what I could see is like a threat to basically Iran. So if you think about it, if the U.S. retaliates to Iran, it's not the U.S. bases that are going to be targeted. Like almost de facto, Iran's going to target Saudi Arabian oil production too, right? And so
Yeah, as we've been seeing with the Houthis since the beginning of that conflict,
yeah, so I think
crossing the border in southern Saudi Arabia.
so I think this is like really interesting the point that you raised. So, like my guess is like maybe Trump can say like to the Saudi Arabian government like if you want continued U.S. security guarantees, then you can't export to China. Basically, you have to restrict the oil exports to them. And if you don't listen to us, we're gonna strike Iran. We're gonna strike Iran hard, and then this is gonna cause a huge retaliation against Saudi Arabia. So that's kind of like the piece that like is like really interesting to me on like the geopolitical stage, right? So we know that Japan is a very close ally, right? So that's why we're prioritizing Japan, right? They also have a really strong central bank, and they always buy bonds from the U.S., right? And so again, buying U.S. bonds is going to lower the yields, right? Just naturally from the demand of that. But also, interestingly enough, right, we know that as you pointed out, Saudi Arabia has they even announced that they're going to cut oil prices by $2 or whatever per barrel and like increase exports to China, where China's heavily dependent upon imports, right? And now, if the U.S. kind of expects a potential conflict or wants to up the ante, then they want to actually start cutting that energy supply to China. And so one way I think that they can apply pressure is like if you want continued security guarantees, if you want the U.S. to be still allied with Saudi Arabia, if you don't want us to escalate with Iran, then we're gonna need some kind of concession here. So that's kind of like my take on this. Again, very highly speculative, but I think it's not by coincidence that the U.S. is like positioning a lot of assets in the area, and it's almost like very like posturing like they're gonna strike. But I think it's more their interest that they want Saudi Arabia to actually start lowering their exports to China. That's kind of like my take on this. plus, like I think it's like the positioning in Diego Garcia is more of like a double, right? Because it's not just Iran's in range. It's like I realize like Strait of Malacca and like these key shipping lanes are also in range too. So that's it's like a very dicey situation. Like if the U.S. is running towards a hard decoupling right now, which I speculate they might be, then this is an existential threat for the CCP, right? And so the question is like, how are they going to respond? How are they going to retaliate? And more importantly, they also need energy, right? Otherwise, their population is going to starve. So it's like a very dicey situation. The more I look at it, to be honest. Yeah, I mean they've been hoarding a lot of like other types of commodities, right? So China used to be very heavily dependent upon imports for grain and agricultural from the U.S., but they're sourcing more from Brazil, for instance. They've been like adding to their strategic pork reserves. I think we all know that like China is preparing for like an eventuality for conflict, right? Based on stockpiling of these commodities and whatnot. And so that's like my speculation is like either Trump sees an acceleration of the timeline, right? Whether something goes kinetic, or he just sees that China can't have these access to these technologies any longer, right? It's an existential threat to the U.S., right? And he wants to create like this dominance in terms of projection of power is kind of my guess, right? U.S. hegemony like needs to be maintained, right? We can't have a bipolar um, or multipolar world in effect. And so I know a lot of people like crypto too. So if we're in the bear market, right, we're gonna have these huge bear market rallies, right? So how do we play for the bounce, right? So kind of last week, it seemed pretty obvious to me that shorts are covering, and that seemed to be the case. And if we look at the Bitcoin chart here, right, 80K was kind of the prior resistance. So right here, before that breakout to the all-time highs. And so I think Bitcoin's really interesting here because if you're gonna have like a risk-on environment, right, a lot of liquidity is gonna go into crypto, for instance, right? If people feel bullish enough to actually start buying here, right, in terms of equities and whatnot. But also, I think the greater political instability and less confidence you have in governments and fiat currencies, Bitcoin also shows more strength during these times, right? So if we remember during the sell-off actually last week, you actually saw the U.S. dollar weakening too, right, in terms of capital outflight. And so I think there's like two ways to think about it. It's one, it's I know people talk about it as an inflation hedge or whatnot. I just see it as a more of like it's like a risk on asset, and if it's a risk on asset, it has like a very high convexity, right? And that's kind of my view. And if there's kind of doubts in terms of fiat and governments, it's also very good in those kinds of conditions. And the way I view it, it's like okay, like the 75K, if we're below that, it's probably gonna shit the bed. That's just kind of my view. Um, but if it's able to hold here and kind of retest that 88 to 96, then like I think we're looking at like a kind of like a 4-to-1 risk reward, right? So that's kind of like how I view it, right? So if you have your 80K is like your threshold, right? If you risk 5 to make 20, that's your 4-to-1, right? So that's kind of why I'm kind of longing MSTR because you have higher convexity with options there, and this is kind of like also just I think this is a good place to actually start accumulating. So that's kind of why I started accumulating MSTR options. And then just kind of looking ahead, so some key dates to look for. So if we remember right, Liberation Day was April 2nd because no one will take him seriously on April 1st. But he said that there's going to be a 90-day tariff exemption, for instance, uh, Mexico and Canada. So I'm going to be closely looking at the early July, right? Because I'm curious to see what's going to happen within those 90 days. Like, does a deal get done between Mexico and Canada? Obviously, July 4th, right? It's pretty symbolic. So, if something's going to happen, I feel like, you know, if China wants to retaliate or whatever, since they already retaliate with the exports of rare earth elements. I also want to see what are they going to do around Independence Day. But really, like if there's a near-term catalyst, I want to be looking at the Japan deal. My expectations within the next week or two, we should get some reasonable clarity and expectations. And if the deal is good, right, they're not going to be so aggressive on China. I think that's a good signal to be, continue longing risk assets and duration. If it's like a shit hit the fan scenario where they really want to kind of do this hard decoupling from China and then start applying this deal template for all the other countries, then I'm gonna be looking at like, hey, where can I reshort the index? So I'm looking at like 57, 5800 on ES. Um, so this is kind of like an area where I'm thinking like, hey, where do I gonna get some downside protection? And then the more I think about it, the more I want to like start shorting Chinese equities. But Lutnick's been on the air, and like other people in the administration have been talking about delisting these Chinese ADRs and ETFs. And so, if you guys remember during the Russian war with Ukraine, RSX like tanked, but then once it got delisted, you had to actually exercise your options with the broker. So, what I'm actually thinking of is I'm thinking of like shorting Taiwanese semiconductors because they're going to be at most risk, in my opinion, for retaliation, and they're close proximity to China. So if there's going to be kind of an event that really happens, I'm going to be looking short semiconductor stocks in Taiwan. But I want to capture some of that downside convexity with these Chinese ETFs. But I'm gonna play a smaller position, right? Because if they get delisted, you're kind of fucked, right? In terms of things to long, I know people have been talking about MP, and I've been looking at it. But the chart looks super weak, and so I'm like, what's really gonna perform, right? Like the last 2 weeks, the only thing that performed was vol, right? Bonds were going down, equities were going down, dollar was going down, commodities were going down, right? So it's like a very, very tricky environment to play in. And so that's kind of like my perspective in these things. Like I would rather go cash the more we kind of rally. I want to see clarity on the Japan deal. And then if, the goal of the administration is to decouple, then I want to be short China and Taiwanese semiconductors. So that's kind of my take on like the events in the past 2 weeks and how I'm thinking of like the next 2 to 4 weeks. But happy to take any questions from here. Yeah, I think we don't know like what the real intent is, right? It seems very scatterbrained and like all the narratives are not aligned, especially between Trump, Navarro, Lutnick, and Musk. Um, it's again a very uncertain time, right, with mixed messaging, and you know, again, I think the bottom line is like we're in a bear market, so you have to, take very different position sizing, and you have to take like a very different type of time frame and outlook, right? Like just as easily as you want to be short, you get these huge rallies, right? Which is very characteristic of bear market rallies. And so you have to be very careful, I think, in terms of how you think about allocation, right? And so that's the thing, right? Like if we get stagflation, right? Like what does that imply? Like of course bonds would be a short, but then if the goal of the administration is really to, get the yield down, right? What if they come up with a deal with, Japan and Saudi Arabia saying, hey, you guys need to buy our long duration bonds, and then that's going to put pressure on the yield to go lower, right? So while you short TLT, then, Japan and Saudi Arabia bid, the long end of the curve, then you get smoked on your shorts, right? So that's why I think the only really like trade I have confidence in or semi confidence in is I would rather be long Bitcoin here because again you have doubt in terms of both the dollar and governments, and technically it looks pretty decent here. Um, and also if there's a chance to reshort or if there's another opportunity to reshort, I would bet against Taiwanese stocks basically. And then that's kind of my perspective into the summer, right? And then I feel like the fall is going to be a whole host of other issues, right? But I think the bottom line is Trump is less concerned with equity markets than he was his first time in the Oval Office. So that's like another consideration to keep in mind. He's more focused on bonds, yield curve, and then in terms of positioning globally, he's like working a lot more on statecraft of developing these deals with these countries, but we have to figure out what those types of deals are. And just as an addendum, like if there's like one thing that's worse than bad news in the market, it's like uncertainty, and we're getting a lot of uncertainty with tariff on, tariff off, exception on, exception off, right? So I think this is gonna cause a lot of people to really heavily consider about their allocations, just like in terms of money managers and people running ETFs and mutual funds. And so I think there's gonna be a lot of pressure to uh, keep a rally on. So that's just something else to keep cognizant of. Yeah. So there's a comment about tips. So like that's the thing, right? Like say we do get like very strong deflation, right? Then do you really want to pay a premium for tips? I'm not so sure, right? I feel like it can swing either way, just depending on like the circumstances that are going on, right? So again, the goal of the administration is to lower yields as much as possible, but you have your 10-year RE up like 50 basis points up to 4.5%, which is again the opposite reaction that they want. But that's not to say that they can't create a deal with other countries where they basically force them to actually, buy bonds on the long end of the curve, right? Or make a commitment, right? And so I think that's part of the reason why Japan is also like another key target for a trade deal, right? Because their central bank has always been very favorable for the United States, right? So that's also something to keep in mind. What about you guys? Like, what are you thinking of trading, or what positions did you take? You guys think this is temporary? Like, based on the server, people are pretty bearish at the moment. So, just kind of curious, like, what your guys' thoughts are.
At this point, things move so quickly that unless you're trading full time as a job, I don't think it's a good idea to day trade at this point.
Yeah, no, I'm in total alignment. I feel like sometimes you just need to wait for things to play out, because by the time you make the move, it can be undone literally the next day. Like we saw this like 3 times last week, right? Um,
It, yeah,
Yeah, exactly. Like sometimes it's up 3% at like 10 a.m. and then by 11 a.m. it's down 3%. You're like, what the fuck? I go in for a meeting, I come out, it's gone.
yeah, we're getting like 7 to 8% intraday moves, right? We have the 10%
Yeah.
upside day the next day. Then we had like 5% down the next day, right? Vol is still over 30 right now, right? So
I think they're going to cheapen up vol in general just because like it's expensive for funds to maintain the vol position. So we're probably looking. What was our target set? Like 57, 5800, right?
yeah,
There's a gap there too.
my guess is like if I want to short again, I want to short the 57 5773 area, right? So that was the high two weeks ago, right? So 5773. Like if I have a chance, I'm definitely going to be unloading positions there, and I definitely want to be able to take on some short positions, because I don't see how this is resolved anytime soon, quite frankly, right? So now they're talking about the sector tariffs that are going to be evaluated within 30 days, right? But what is the game plan here? What is like the end goal, right? And unless he totally repeals everything, right? I think this uncertainty is going to remain, which means other people are going to be less concerned about allocating exposure, right? Because why allocate your capital, right, when you have no idea what's going to happen and you might take another big drawdown, right? And in fact, a lot of people already have a drawdown right now, so I'm more leaning on people want to actually delever when they have the opportunity, which is why that 5773 area kind of makes sense to me. The only way like I would feel confident like this is over, is like he rolls back pretty much everything, right? We don't have like other countries saying that we're not going to trade with China, and we need like a big gap up over that 5,800. And like I think 5,800 is where the 200 day is now. So
Uh,
so
it's
that's
at 57.89.
yeah. So like that's like another reason like people love in terms of like longer term fund managers, they love 200 days. So
Yeah. So I literally have it on that chart. I posted it. It's on the right side for the 1 day with the SMAs. So if anybody who does want to take a look at it, it is in the futures chat.
yeah, that red line on the left, right below that 5,800, dude, that's like where I would go short, 100%.
I've had it since March, like the beginning of March. That bar. I think with where VIX is positioned at right now too, and where we are on the chart, they are going for that gap fill at like 21, 22. So they're probably gonna bid it. There's someone massive there that's trying to unload above like 37, right? Like they're above 35 on VIX is where he wants to unload. So that's why we're kind of just chopping on the VIX right now. And
Yeah,
then
usually 30 VIX is like a vol trigger, so like a lot of vol sellers, they want to sell above 30, right? So once it's like below 30, like then they can really go to town to like start selling vol, but unless it's below there, then they always get risked, blowing out, right?
yep,
Um, Question on 2 year. Yeah, I don't really have much insight into the bond market, so I'm gonna have to defer there. In terms of alternative structures, I don't know if they're gonna do like a Bitcoin bond or some structure like that. I think first you need to have like a foreign reserve to like actually start allocating, Bitcoin into like a reserve, right? So, and then I think even more importantly, you need to have stablecoin legislation, which is like ongoing, right? I think I remember there's like a piece of legislation that's ongoing right now that's supposed to be like, I guess, figured out by summer if stablecoins are going to become, you know, allowed or not. So I think first you need stable coins, and then once you have stable coins, then you introduce, you know, crypto into reserve assets, and then once you do that, then maybe you can start creating like a structure. But until you have those pieces in place, I feel like that's kind of far out. But my lean on this is they're gonna probably have our allies actually start allocating to longer duration treasuries as a part of like a
yeah,
condition.
they're maneuvering not directly at each other, but around each other. That's why that you also see that heavy tax on or a heavy tariff on Vietnam as well.
Yeah,
Canada's a whole different situation though at this point in time, so I'm not really
yeah.
I kind of don't
So
really have
we're gonna
anything on
know
that.
in 90 days. So I think like right first week of July, we're gonna know what's the situation with Mexico and Canada, right? But
Yeah,
my feeling is like something's being worked behind the scenes, right? Why take their countries off the billboard, right? They weren't there.
they're
Um,
taking their time.
right? Yeah. So, but if there's gonna be a deal happening first, I think it's probably gonna be Japan, right? Because they're more aligned with us than other countries. They're much more friendly. And so, and it's in their interest to actually, create a deal with us earlier rather than later, because they're super worried about China too, right?
Yeah, I think it's also like a play on like the U.S. debt, and the securities, right? The securities
Yeah,
owed
exactly, right. So like,
to Japan
U.S. can
and
guarantee the
China.
security of Japan, right, in the face of China, right? Then as a concession, right, you have to like pay the pipers, like kind of my expectation there. But then once you have the template, right, then you apply it to all countries. That's kind of like my second guess right there.
Yeah, they're this whole tariff thing right now is just they're just trying to fill everybody up and see what everyone's willing to come to terms with.
Yeah, which is why like tariffs on, tariff off. I think it's kind of like meaningless at this point right now. I think really my take on this is we need to stay above the fake news headline, which is like the 18350 or 18360 on NQ, right? If we start accepting below that, just in terms of pure price action, I'm like that's like a super bearish thing, right? If you really look at like what's happening right now, we're still like this is the second inside day, right? Within that 10% bar, like that's crazy. You have like 5% days within another 10% candle. So depending on like where we break out of that candle, right? That's you want to follow that trend. It's just like basic price action, right? Like um, once you have multiple inside days, just go with the break of the inside day, right?
Yeah, I think also because we're trading on such a wide range, right? And we are balancing in a really wide range as well.
Yeah,
You, it's kind of expected to like the moves will come faster than you realize.
yeah, and then the catalyst to break the inside range is either I don't know, like Trump's gonna speak tomorrow about semiconductors, apparently, right? We'll see what he says. But my expectation is the first deal is going to be the news to really, you know, break the balance and push the markets either above the bar, like the 19,394, or below the 18,360 is my guess.
I kind of want to see that gap fill tonight or in the morning though, before anything happens. They'll probably like hold this over under on ES, probably under like 54.37, but like above 53.40 in my opinion. I'd probably long 54.30s.
Yeah, no, I feel like they're gonna probably close it tonight, dude. Just looking at it.
Yeah.
Right, Bitcoin's right now 83K, right? Dude, I'm telling you that it's tough for that 86 to 88K range. It's like a big resistance right now. Um, but
I
I am bullish on crypto here, though. As shitty as everything looks, I am bullish on crypto for now.
122? Bitcoin 122.
Um, I wish, bro, dude. It's just like so dependent on like, right? Okay. Here's where I see it. Like, deal comes out, like we break 88K on Bitcoin, right? And then we consolidate a little bit more. There's more news, more deals, right? 96K, right? And then after 96K, then I think the sky is open, right? But
Yeah.
I feel like you need a few things going down. You need volatility to start dying down, which it is, which is a good thing. You need deals to come out, and you can't have more retaliations. Like this rare earth metal thing was I think expected, but at the same time, you don't want to see more export controls like that, right?
I don't I feel like 110 is it kind of does coincide with like 5800 at the top. Um, I say 5800 a lot too, but that's just because that's also where JPM's collar is at, right?
Yeah, yeah. I mean, there's a lot of confluence, right? There's the collar, right? There's the 200-day. So I feel like it's like a magnet right now, and then there's gonna be a lot of news. But I just can't be short here right now, bro. It's just like
Yeah. It'll bounce back, but I feel like in the long term, 68K will happen. It's just a matter of when.
I can be short if we're below like that fake news bar, right? So
Yeah.
if we're below the 18,360, then in my opinion, okay, like all this optimism on the potential deal and these tariff news is like it's all discounted, right? And then people are just kind of losing hope there, and they just want to divest, right? But as long as we're above the 18,360, I feel comfortable leaning long here. That's kind of like how I feel.
Some QQ, some Qs, um, calls would be pretty good this week.
Yeah.
Either like Tuesday or Wednesday. I,
Uh,
I would feel like.
but that's the thing. We're still at like a 37, 38 vol or VIX right now. So right, so like rule of 16, you have like 1% move for every 16. So we're still trading way more than the expected or the implied volatility 30 days out, right? So the realized vol is like super crazy high right now. And
Dude, it's so bad. I mean, you've been hearing me bitch about it every single day. Trying to trade SPX.
yeah, the premiums are still super expensive too, right? So that's the thing, right? Like that's if there's positive news, there's so much premium volatility that can like just send this higher, right? Because if those hedges start unwinding really like very quickly, and the vol collapses, then you can easily get another 5-10% no problem in my opinion, right?
Yeah, there's also I think for us to crack under 34 would have to trade really fast, right? 34 in that 33.6 area, it has to trade because there's a gap there, and someone's been bidding up 35. So if we get to 35 this week and it doesn't reject, we are for sure going back to 58.
Yeah, and I haven't been watching the VIX futures too much. But yeah, again, like 30 is kind of a trigger from my understanding, right? So
Yeah.
if people start selling
I have
vol,
it.
but that's a problem, right? Because if there's uncertainty for next month, right, then people are gonna keep the hedges on, or they're gonna roll the hedges. So it's
They're
gonna,
gonna roll.
yeah, it's gonna be more sticky, right, in terms of the vol,
Yeah.
right?
So my theory too is like, or at least for this year with Trump, it's kind of expected to keep VIX at the low of like 17 to 20. That's why we see like such a big spike from there, from this 20 area on April 25th, or I'm sorry, not April 25th, April 2nd, and then they're gonna keep VIX below 30 if we trade under that, or like not under 30, but at least under 37. That's my timeline for like on VIX for the rest of the year. So we're gonna get like a lot of like wide range trading and wide range balancing.
Yeah, no,
It is.
I'm in total alignment. I think that this year is like gonna be like high volatility year. It's like it's not gonna die down. So and more so like if you just think of it purely from like a midterms perspective, like I think that they would rather tank the market now, blame it on Joe Biden, and then try to do as much QE and stimulus as possible, like even like yield curve control or whatever, right before the midterms to say like, hey, like we are able to save the economy basically. That's kind of like my take on this as well.
Yeah, because we were thinking about 4,800 would trade by like September, but then we just got that instantly like last week, so everything kind of just moved up.
Yeah, but that's not to say like with increasing unemployment, right? So like my firm as like one example, right? My company where we're cutting R&D expenditures by like half, right? So I imagine a lot of people with the uncertainty, they're cutting budgets and hiring and expenditures, which is like very like recessionary like behavior. So I would imagine
You know
like as more people get on unemployment, especially with the government employees, right? After this 90-day severance or whatever, I can see like unemployment rising as well, which would be another kind of bear signal. And we saw that with the CPI and PPI, right? They were super cold, right? So
Yeah.
I feel like we're more deflationary rather than stagflationary. But it's just like the
You know what's
bonds going like out of whack. That's kind of like muddying the picture, I would say.
Yeah, it's this place is more like a move on bonds than anything else, really.
Yeah,
Like,
because that's gonna force Trump's hand. That's the thing, right? So
yeah,
the market wants to force Trump's hand, which it has been doing, right? The question is like, what's his real end game? So I don't know. Like we have to figure that out, and I think we'll get clarity with Japan.
you know what's interesting? Recently, I haven't really been to the karaoke rooms, but I heard there's like a lot of like new girls now, right? That are starting working, a lot of new domies. But then uh a lot of rooms, a lot of the karaoke rooms aren't getting booked, but there's a flush of a lot of like new working girls. So economy's kind of like slowing down quite a lot.
Yeah,
That's
I
just
think
how
I
I
think
judge it.
what's like the phrase, right? Like the strip. If the strip is slowing down, it's also like an indicator, right? Like people are saying like I don't know, like girls are delaying longer for their haircuts, right? As like another that's another indicator. So I think a lot of things are pointing towards reduced discretionary expenditures, and because that's the thing, like at the moment that the media starts saying that we're in a recession, then it's almost like self fulfilling prophecy because then everyone starts cutting their spending, right? But I think at a high level, a lot of people are, lowering their discretionary expenditures purely by the fact that their employees are also cutting or tightening the belt, right? So if the employer is tightening the belt, right, reducing headcount, slowing hiring, reducing expenditures, right, this is going to kind of reflect in employee behavior, and that's going to kind of trickle down to like the rest of the economy. So that's kind of like my observation right now.
Yeah.
Yeah, that's pretty much all I had for today. If you guys want to chime in and say anything else, I think we're just gonna probably close out here. But thanks for joining, and then feel free to ping or just message if you guys have any other thoughts or questions.
I do have an idea for the website that J Powell's printer did make. I don't know if he's able to make something where we can include on-call videos and the drafts for them and the recordings. If he can make like a section for that, because I know people are bugging for like the recordings as well, but they can't make it.
I can look into it. I think it should be doable. The only problem is like having to host all that video will be a bit hard.
We
So
can host it through like a Google account or something, right?
yeah, I can just drop the links in. Yeah, that's pretty easy, I think.
Yeah,
we can do
I
for
can
the
do YouTube. I
verification.
can just host it on YouTube and then you can just drop a link.
Yeah.
Yeah.
Yeah, I can do that.
And then the only way they can access that website too is like, again, being in the Discord.
Yeah.
So I think that's about it. Well, that's it for what I have today.
Cool. Yeah. Again, thanks for everyone for joining. Let's see what Trump does and what Japan does, and then yeah, my take is like I hope they don't go like full hard decoupling because then I think that's gonna create like a huge issue. It's gonna be a disaster for equities. So my take is hopefully we get some kind of good deal for everyone and rally, so I can just dump all my longs. But we'll see.
I'm so mad I couldn't trade the short, dude, and that long. That Wednesday, man. I wasn't like actively trading this whole environment, but I was getting killed in the beginning, and then now I'm like doing all right.
Yeah, you and me both, dude. I started buying on Monday, which was a mistake. Like I said I should have waited until Tuesday, but I didn't. I started buying on Monday, and I was pretty much majority cash. Um, so I was in the perfect position, honestly, to either short or just accumulate at the right time, but I didn't. But it happens, you know.
Yeah.
All right, cheers, guys. Have a good one.
All right. Cheers.